Hey, what's going on, guys? Welcome back to my channel. Today I wanted to show you a really nice loan calculator that I found online that will illustrate the benefits of giving extra payments on your existing loan. But before we continue, please don't forget to like and subscribe to my channel. This helps me continue creating more content for you guys. So the website you see in front of you is the one that I found. It's called loan-calculators.org. I will have a link on the description below so you guys can just click on it. You don't have to worry about writing it down. What I really like about this website is that it gives you different options so that you can see the benefits of giving extra payments. For this illustration, I want to go ahead and let's say we have a car loan. Your original car loan was $35,500. The term was 6 years, and you have options too to put months or years here, which is also really nice. And you have your interest rate. Let's assume that your interest rate was at a 5.375. Depending on what the market is right now, that could be higher or lower, but that's the beauty of this as well. And then right here, it's gonna ask you if you want to show extra. Your payments are gonna be monthly or bi-weekly. So typically it's a monthly payment, and then it also asks for the date. Now this is the reason that this is a really good website, because for the most part, people don't get into a loan saying, hey, I'm gonna get this car loan and I want to give extra payments right away. Typically when somebody wants to give extra payments, it's been, let's say, a year after the car loan, 2 years after the car loan, right? So this is a real good website because you can actually tell it, you can put the date that you started your car loan. So let's assume that I actually started my car loan not today, or I'm gonna go back and say I started this car loan back in January 1st of 2022. Okay, for right now, what I would recommend you do is, if you want to see the difference when it asks for extra payments, right now we're going to put no. The reason for it is because you want to get an illustration. You want to get what your car loan looks like if you make no extra payments at all. What are you looking at? Okay, so after you do this, this is going to be your base, right? You're going to go ahead and click on calculate. And then of course, since this is a free website, it's going to have a lot of little things here. So you just want to scroll down. This is going to give you the results. Right now it tells you that your loan was $35,500. This is how much you're paying in monthly payment. There are no extra payments. You're going to make a total of 72 payments, and you're going to pay interest of $6,110.29 for a total cost of the loan is $41,610. Okay, so if you scroll down, what I like about this website is that if you scroll down, it's going to give you a table, and it'll give you to the cent where your loan should be at a given time. So remember, we backdated this loan to January 1st of 2022, and right now we are currently May of 2023. So we go down to May right now. Theoretically, we would be at this point from the $35,000, we would owe $28,117 with 53 cents. Now, the reason I like this is because what you can do here is you can scroll all the way down to the bottom. You want to grab the bottom part. You want to highlight all the way you get to the top. Right there. You want to copy that, Control C or right click and C. And then you can go ahead and open up an Excel document. You click on the first cell on the top and you Control V or paste. And it's going to come out kind of small, but don't worry. Right here, you click on this little button here, and it's going to ask you to match or keep. You want to match. Match brings it back to a normal size. And there you go. You're going to notice that you have your payments, your payment dates, payments 1 through 72. This is going to be cell 73 only because the first cell is being taken up by the information. So this is your base right here. Okay, now we're gonna fast forward till today. Let's assume now that you're done with this, you got your base done out of the way. Now you want to go ahead and come in here and say, you know what, I do want to give extra payments. So we're gonna click on the yes little button here, and here's where it gets very, very tailored to what you can afford or what you can do. Maybe you got, for whatever reason, you have extra money this one time and you want to know how much it would affect, say, you know what if I give $1,000 one time today and that's it? You can calculate and it'll show you the difference. If you're gonna be giving monthly or week or bi-weekly payments, how many or how much extra you're gonna be giving every 3 months, that's quarterly. Or you know what, once a year, I know I get extra cash for whatever reason, a bonus, a stipend, income, whatever it is, and you say, I know every year I can afford to give $1,000 every year. So this one's real nice because you can go however you can do it. What I'm going to do here is, our payments right now are about what, $577. Let's assume that for whatever reason, you know, got a better job, I got out of some bills or whatever. Now I want to see what would it look like if I'm able to make an extra $200 payments. But remember, the loan already started back in January of 2022. Now you want to start these payments on May of 2023. So that's what that is the beauty of this calculator, is that it'll show you in the illustrations the effects. So once you click on that, you do whichever option you know works for you. You want to click on calculate again, and then we're gonna go ahead and scroll back down. I don't know if you remember, but I think it was 41 something. We're gonna go ahead and scroll all the way down here. And now this table is going to show you your new payment calculator. And we're going to go down to May of 2023. Notice how before May, right here in this column, extra payments was 0. And then once you hit May, you went ahead and you started giving $200 extra a month. So now your payment goes from $577 to $777. Okay, so now we're going to go ahead and come down here. We're going to go ahead and go up. And we're going to do the same thing. We're going to copy. We're going to go to the Excel document. We're going to highlight, skip a cell or two, and then paste the information. Again, we're going to come back down here. We're going to say keep. Well, no, we're going to match. Once we match the destination, sometimes these numbers come out. The easiest fix here is come up here, double click on the line. Notice how it becomes two arrows there. Just double click on that, and there you go. So up until April, everything should be identical. Right here, this is all identical. Now we have a side-by-side comparison. We have your original loan amount on your left, and now we have your new loan with the extra payments. Everything remains the same up until April, which is right here. We can go ahead and highlight that so you can see that these are the same. Then you start seeing a difference. After May, after you start making your extra payments, this is when we start noticing the difference of why is it beneficial to give that extra payment. Okay, so we're going to scroll down. These are all your payments, and you're going to notice that according to this schedule, if you give an extra $200 after about a year and a half of making payments, your new last payment would be September of 2026, when your original one was December of 2027. Okay, so that tells you that you are going to end up finishing off this loan about a year and 3 months early. Now, not only are you going to finish off early, which that's really a good thing, but you're also going to save yourself some interest. With the extra payments, you're going to end up making a total, the cost of the loan is going to be $40,528.15. I'm going to go ahead and copy that over here so that we know our total. Again, we're going to click on this, and we're going to click on match, not keep. So that's your new loan total. I forgot to do it over here. Very simple. It's not a big deal. We're just going to come up here, and we're going to say no to extra payments so that we can know how much we're going to end up paying. So then we scroll down to the summary. We're going to copy this, 41,000. We're going to paste it here, and we're going to match. All right. So now that you see this, your original loan amount, you're going to make 72 payments at $41,610.29. That's how much the loan is going to cost you. If you decide to make those extra payments, you're going to come out of the loan 15 months earlier. To begin with, that's a big deal. That's 15 months. That's a year and 3 months ahead of time. Not only that, but you're also going to be saving yourself some money. So you're going to end up saving yourself about $1,100 in interest. So that's kind of like the gist of this calculator. I mean, in a car loan, it makes a little bit of difference, but what I really like using this for is for home loans. When you do a home loan, it makes a very, very big difference. So let's assume you are going to go into the reason you're using this calculator is for a home loan. Okay? So for this home loans are, right now you're looking at roughly about, let's say, $200,000 a home loan, and the interest rates are, or not the interest rates, the term is typically 30 years. Right now your interest rates are very high, so let's a safe interest rate right now would be, let's say, 6.0. Right? Again, we're gonna go ahead and say, no, I want to start my loan from back in January. I'm not going to add any extra payments, because remember, we want to know what the base is first. So we're going to go ahead and click on calculate, and we're going to scroll down. We're going to get the summary, right? You're going to end up paying $431,676.38 as your total payments. Interest paid is $231,000. So then we're going to go ahead and notice how it takes it should take 360 all the way down. Yeah, 360 payments. Okay, so I mean, this amortization schedule is really nice, but all the information you really need is right here. So I'm gonna go ahead and just copy this, and I'm gonna go ahead and open up a new sheet. And I'm going to click here, and I'm going to go match, double click here, double click here. Then we're going to go back and check out what happens when the simple adding that extra $200. Let me put yes to extra payments, and I want to go monthly. I want to add $200. And we're going to go ahead and calculate. Then we're going to go ahead and get the loan results. Copy these over and paste them. Double click here. Double click here. And there you go. Now you can start seeing the difference. And remember, this is a loan that we started in January, and then we decided go ahead and start making payments about a year and some change later. Look at what the difference does to your loan payments here. Same loan amount, same monthly principal. The only difference is that you're making $200 of extra payments. You have now, because you've decided to do this about a year into your loan, you have saved yourself 100 payments. So in my mind, that's what, 8 years at least? 8 years worth of payments, roughly. Your original payoff date was 2051. Now your payoff date is 2043. So it's 8 years less. Your total interest is where you see your savings. Here, your original loan amount was 231. Now you're only going to pay 159, and your total payments go from 431,000 down to 351,000. That's a savings of close to $70,000 for making those extra payments of $200 a month. So as you can see, this loan calculator really opens up your eyes to possibilities. Is it something that it's worth it for you? Sometimes you do this and it's like, hey, I'm gonna have to give an extra $200 for the next 3 years, and I'm only gonna save $50 or $75. Well, then maybe it's not for you. But for the most part, the earlier you start making those extra payments, the better it is for you. I hope this information has been helpful. If you're still with me now, please don't forget to like and subscribe, and I'll catch you guys on the flip side.